Let us welcome on board a very special guest. We've got on board with us Bala of Birla Sun Life AMC. He joins us on the show. Bala, hi, good afternoon. The market's surely looking a little nervous. The picture on flows turning weak for the month of March. How worrisome is it? Do you see this trend continue?
Of course, there is no doubt month of March was literally was than the previous month or maybe the last few months of trend. At the same time, we need to also take this number into two parts. One, the equity number that has been reported by AMFI, which includes arbitrage fund. And arbitrage fund in general have seen outflow in the month of March, either for booking profit or before 31st of March, the balance sheet ending. Therefore, some people have redeemed. If I knock off arbitrage fund outflow, the net inflows in equity, the pure equity schemes, balance fund schemes have been higher than the number that has been reported in the AMFI site. Having said that, in general, historically we have seen month of March is generally not the very good month to see good inflows, big inflows. At the same time, March is being big before the year ending. We always seen historically some bit of slowdown. At the same time, SIP is the one model that one has to look at it. SIP as a concept having got picked up quite significantly in the last few years. We see actually the SIPs continues to have the reasonably good registrations. At the same time, they continuing to have larger SIP books is increasing. Having said that, I think post budget, especially introduction of LTCG, put some kind of question mark in terms of relative attractiveness of both assets between fixed income and equity. And equity as an asset class post these LTCG introductions has become less attractive, taking into account the tax consideration. At the same time, fixed income has become a little higher attractive, and therefore fixed income as an asset class also now beginning to see some kind of pickup.
Now, redemptions have generally picked up in bad markets. Are you getting a sense that little bit of redemption pressure also has started?
I think we see is it could be one temporary phenomena. I think redemptions is again have to be taken to two kind. One is redemptions coming from a pure the either traders who come actually for investing for 1.5 years kind of things, and they would of course be looking at redeeming. The people who come purely the retail investors who come actually for long term, they don't tend to redeem, and that's what we generally observe. The maturity level of the investors in the last few years have been going up, which essentially means he is actually willing to stick to his investment, keeping in mind the need of investing in mutual fund is for long term, not for short term. Having said that, we will see some bit of redemptions due to the market volatility. Somebody would have come for dividend purpose. Once his purpose is achieved, he will redeem. You will probably see the inflow that has come in the month of March due to the dividend declarations given by the mutual funds. We will see that money moving out after say 9 months period. So we can't consider it as actually the redemptions. That's actually more of tactical allocation which investors would have done, and those tactical allocations would also move out once the purpose is met.
Right. Bala, how is the stance of HNI and retail towards mutual funds in general? Is the allocation, you think, improving?
Yes, definitely in the last few years, the maturity level of investors have been rising, and I generally call it as a post 2008-2009 crisis in the financial market. That is the time I noticed the investors' query for redemptions were far lower than investors' query for investing in mutual funds. That itself reflects then what's the kind of curiosity which customers are building in when the markets turn volatile. Is it for redemptions or is it for subscriptions? The curiosity I have seen over a period of time is actually keeps rising, mainly for investing in mutual funds at a very volatility in order to build a long-term portfolio. And the same way, the distributors, I call it as an advisors or financial advisors or distributors across the country, also have been handholding the customers. One, entry into the mutual funds with an SIP, and second is do a proper asset allocations, and then make them realize the mutual fund is meant for long-term investing. Therefore, the holding period also rising. So one of the number I keep looking at, as especially in SIPs, then SIP today is most of the subscription that comes, they either they sign it for 5 years and 10 years or perpetuity. And the number of months on which the SIP remains invested actually goes beyond 5.5 to 6 years. Even in the retail, the number of period for which the investments are being held by the investors now is actually goes anywhere between 4.5 to 5 years, which again indicates that mature levels of investors are rising. And as we go to the ground level, and as I mentioned earlier, the curiosity actually for investing and building the portfolio continuously seems to be the trend seems to be emerging. Therefore, I call it as a mature level of industry is actually keep growing up.
Right. Bala, so what's the average SIP level on a monthly level that you're expecting? And do you expect the flows to continue in the same manner?
Now, we were just putting some kind of projections in the beginning of the financial year last year as well as for this year. And last year we were estimating the industries will cross about 2 crores size, 2 crores numbers in terms of count, with an aggregate flow of close to about 5,200 crores. And today the aggregate monthly inflows in SIP is not only crossed the 2 crores count, it is also now crossed about 6,000 crores. And it has been growing at anywhere between 58% was the growth last year, and that is the actual number on a year basis. Don't assume 58% growth will come continuously for longer period, because last year was exceptional year, post the demonetization also happened. And even if we assume it will grow at about 30-35% and only in SIP alone, since that is now becoming the mode of investing in mutual funds, I would not be surprised this number on a per month inflow basis crossing close to about 10,000 crores by end of the financial year. The 2 crore number, I think every year the number keeps rising by anywhere between 30 to 35 lakh counts, and that number I think should continue.
So how do you see MF flows in 2019?
So the way we see is the run rate into the mutual fund and per month run rate in general has been the range of about the net run rate is anywhere between 20 to 30,000 crores. That's pretty wide range. I think we saw an exceptional month of September, October, November last year. So remove those exceptional months and also look at the SIP, which is close to about 600 crores. Then average run rate in mutual fund inflows in equity should be anywhere between 10 to 14,000 crores. That could be the range that one should expect. I think there will be net inflows that one could expect, given the fact that more and more acceptance is getting developed from investors to consider mutual fund as part of their investment bouquet, and therefore I think that number will continue. Having said that, given the fact that we have seen interest rate volatility, especially in the last 1 year.
Great. Bala, this week is extremely critical for equity markets because, we're going to be officially kickstarting earnings with Inflows coming out on Friday. Tell me the trends that you're looking out for from the Q4 numbers.
I think it's the first time we are seeing the earnings for companies showing an uptick, and of course markets are turning a little volatile. At the same time, the few lead indicators, especially the microeconomy numbers, such as air passenger traffic, commercial vehicle sales, and the way the operating cost has come down. If you look at from multiple angles, including the way I think rural growth is coming, which is being reflected on the two-wheeler sales, AC sales, I think all of them are actually pointing towards improvement in the overall profitability numbers. Therefore, we will probably see the year of 2018-19, a lot of upgrades of earnings, a lot of positive earnings surprises, as we have been expecting for the last 2-3 years, and that I think should be the trend that one should expect. And this actually the growth momentum is coming largely more coming on the back of consumer segment seems to be actually on the buoyancy mode, which I think should reflect on the numbers.
Great speaking with you, Bala. Thanks very much for taking out the time and giving us more clarity on how mutual funds still have their skin in the game, and the conviction with the kind of inflows that we've seen over the last 12 to 18 months. That conviction continues. Great to have you once again.